What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining us today. We have a great video installed for you on how to identify and utilize the power of market structure. So we're going to learn how to identify key levels, trade from those key levels, and we'll throw in some tips and tricks that we teach over at the Commitment of Traders Club for you to learn and become better traders for free. So without further ado, let's get straight into the video and I'll see you over on the charts. Okay, so over here on the charts, what can we see? We are trading pound US dollar. Now, why are we trading this? Because it is the second, if not third, most traded pair in the world. It is traded heavily by the banks and institutions, which means we can utilize our COT reports. If you haven't heard of them, please check out our previous video, which I will link up here somewhere, and you can find that out more about it. So we're trading it because the banks trade it and we can utilize our secret COT report trick. So market structure, what we want to do is we want to keep it very clean and concise, but also allow for the market to breathe and not get stopped out by those pesky stop loss hunting. So let's get straight into the video. What we can see is we have been moving sideways for a few times. We're obviously back testing this. Let's just assume that we've gone on to the Commitment of Traders Club, if you remember, and checked out the COT report. We know that the banks are moving money to the upside because of what we can see, and therefore we're taking long trades. So let's just assume we've done that already. If you don't know how to do that, check out some previous videos. So we can see that there's been a big impulse to the upside. Let's see what happens. We're trading on the 4 hourly, and we can go from there. Okay, so we've got a level on the market created here. And we've broken above that level. It's been retested here, so let's see if we can catch a retest of that. Okay, so there's our retest. Okay, so there's our retest. We'll put a position in. We always want to do a 1 to 3. Why do you want to do a 1 to 3? Because we can be wrong 7 times and still be profitable. It's silly not to. So we'll do a 1 to 3, and we may even have a few trades going at a time, depending on how we do this. Stop loss, we don't want to be stopped out immediately, to allow the market to breathe. But also, if we're trading support and resistance zones and levels, we want to be stopped out sooner rather than later, because there's no point sitting in a trade if it's not gone our way. In this instance, we're not long-term swing trading if we're just trading on the 4 hour. If you trade on the daily, you would allow for a larger stop loss just to let the market actually breathe more and hit your target. But here we're trading quite narrowly. We're not quite day trading, certainly not day trading, and we're certainly not scalping. But so we can be a little bit more lenient. But again, allow for a nice 1 to 3. Okay, let's see how it works. Fantastic, perfect indicator that the market's moving. Okay, we may even have a new level here. How do we know it's a new level? We've had previous resistance at this level before. 1, 2, 3 times, 4 times, and now the market has broken above. So there's a good chance that the market will come and retrace to this. Okay, good indication. So let's see how it plays out. Fantastic. First trade in the bag. How many pips have we profited? 140 pips from this trade. Beautiful, nice and easy. Let's go over it again. So the market broke above the previous level of resistance. We then anticipated to turn into support, which it did. Why did we enter the trade here? We had a weak rejection at the anticipated level. Now, Commitment of Traders Club members will know how useful the Fibonacci tool is. My personal trading plan is I use it very frequently. We can take it from the previous low to the high. We see that the market also respected the 0.382 zone, which is a fib level, good indication of an end of the pullback, and then pushing to the upside, confirming our support. So a fantastically taken trade with a nice pip result. Let's see how the market plays out. What I would like it to see is to come back to this level here, but because of these candlestick formations here, nice parallel formations even, We may just extend the zone slightly and see if the market comes back to retest it. Okay, so we've got an area of resistance up here. We can expect then the market to pull back and perhaps grab some support from this area. So we've got some wick rejections in this area. Let's put in an order. And because we're putting in a pending order just above, let's have our stop loss below this level. And we're okay. If we're wrong, we can find new opportunities to enter. Let's just put some light on there. Perfect. 1 to 3. Always. And why are we taking this trade? We're taking this trade because it has broken this previous zone of resistance. It has turned to support once here. It's coming back, and we anticipate it to turn to resistance and support here. We anticipate it to turn into resistance again before a continuation to the upside. We've got our 1 to 3, so let's see how the trade plans out. Okay, we're definitely in this trade. Fantastic bullish sentiment here. A big candle like this gives us the support that we need to show that the market is moving in our direction. We've got buyers are stepping in. Again, we would have done our COT data reports to check that the banks are moving in the uptrend as well. So we know we're good. And there we have it. Stopped take profit again. So that's 2 take profits today. Let's check how many pips we've got now. Fantastic. Another 120 pips in this move. Why did we enter? We had broken the level, we had resistance and then support again in a short period of time, wick rejections which support our analysis, price pushes up, we had a bit of an overextension, so we knew it was going to come back. For those traders who like the Fibonacci like myself, take it from the very low or the previous candle which caused the move, push it to the upside. It does hit a fib level, the 0.5 or the halfway point, continues to the upside. So that would be a confluence. Check out our Fibonacci retracement lesson to understand why we like to use it, and all about confluences. Took the trade on the candle which showed that the buyers are stepping in, and boom, Bob's your uncle, we take the profit at the top. So let's see what happens. So we've got a new level forming, which is this level here. This level has found resistance here once, twice. Buyers stepped into the market strongly. It found some more resistance, found resistance here and then broke through the level, so we can anticipate the market to come back and find support here before continuing. So let's see how the market plays out. Okay, so it did find a retest here, but the sellers are still in control. People who would have had their target up here, and some reversal traders will be putting in their sell positions. We are coming into this area of interest. Now, what we want to see is we want to see a shift from a bearish momentum into bullish momentum before we take the trade. So let's see what happens. On the 4 hour, it is one of the most accurate time frames to trade from. It removes all the market noise. Okay, so this is a good indication. Price broke below the zone of interest, but failed to hold, and candlestick formation formed in which there was a huge wick rejection, and we're actually still above the level. Now this is a good indication that the buyers are still in the market, and that they don't want price to reverse at this stage, and we have retest from our previous resistance. So we will enter a pending order just above the candle. We'll have a stop loss just below, and again we always want a 1 to 3 so that we can maximize our profits. Now traders, do not exit a trade too early. You may see the price is pushing in your favor. You think, great, I've made some money, let's close the trade out. It doesn't work like that. Check out our previous video as to how to trade Forex to learn more. So with that in mind, we've set our target, we've accepted our loss. Let's see how the market plays. Fantastic bullish candle there. We are definitely on the right side of the market. Wow, and there you have it. Fantastic. This was a great trade. Let's review it again. We had resistance, resisted again, broke through. We anticipated the market to hold this position, which it did, and institutions and retail traders who are clued on into the direction of the trade would have had an order placed here. Huge buying pressure and momentum, and boom, 1 to 3 secured nice and easily with another 112 pips taken there. Fantastic. So traders, we'll cut the video there. Just a short video on how to trade support and resistance and the power of it. Keep your charts simple. You'll notice I have no indicators. I can turn my indicators on if I choose to, for example the 200, but that just confirms that the market is moving to the upside, for example. Keeping your chart clean will allow you to make your own judgments on the market and not follow the judgments of the indicators. You'll learn much quicker that way and it'll feel more satisfying when you are correct. Don't be afraid if you get stopped out. It's part and parcel of trading. Check out my previous video as I said. But again, let's run over the takeaway points from this video. We want to identify key levels with wick rejections and previous areas of resistance or support. And we want to wait patiently for the market to pull back and retest this key level. Some traders may have taken a trade here, but it's not a key level. This is our key level here. Wick rejections, previous price action, previous price structure, resistance and support here, and again came back for the full retest of the support before pushing to the upside. Patience pays. Traders, I hope you learned something today. I really appreciate you hit that subscribe button, like and comment on the video anything you like or dislike. I'm all here for learning how to improve my channel. We are a relatively new channel, so any support is greatly appreciated. If you want to learn more, want to become a successful trader, head over to the Commitment of Traders Club, have a little look, join our club, become a member and get access to some fantastic features that will help you trade in the long run. With all that said, traders, thanks for watching the video. I appreciate your support and always happy trading. Bye bye.